Good evening, Reggie. Can you hear us? First, let me ask you the million-dollar question. Where do you think this market will bottom?
Okay, we're probably close to a bottom than we've been in previous times. With the break of the 12,500 levels today and the 12,000 levels today, I think the immediate bottom stands close to the 11,000 mark on the Sensex. And I think beyond that, there is no greater negativity that can really push it lower, maybe about 500 points from there, but that's about it. I think we are very close to a bottom than we ever thought of ever before.
Okay, but just now, a few minutes ago, SEBI was having a press conference. What do you think would be the significance of all those things, especially the removing the unnecessary curbs on FII, and the chairman also said that FII structure needs to be reviewed. What would that be?
I think we are trying to repose some confidence back into bringing some FIIs back into the market through the P-note ban, which was in vogue for some time. And the P-notes have always been a tricky issue that has been dealt with by the market regulator. Decisions on the P-notes have been taken. Now we have an easing of that curve, probably encouraging a little more FII investment to come in through that route. So I think probably there will be a little more of investment that is likely to be encouraged to come into this country and through our domestic markets because of this little gesture that the market regulator has now taken. So that I think will be a positive step in helping the markets attract a little more liquidity than it is doing at the present time.
Okay, my colleague Divya is here.
Reggie, obviously realty stocks badgered today as always at the bottom of the BSE sectoral indices. What happened to DLF? They were supposed to carry out the buyback today, the hammered by almost 10%.
That's right. I think it was not just a question of DLF and the buyback, but I think the entire sector got hammered. And if you look at the Sensex per se, all the 30 stocks on the index were hammered down today. There was hardly a single stock on the Sensex that was left standing. And I think reality, as always, like you rightly mentioned, has always been at the worst end or the best end, depending on how the Sensex performed on any given day. And of late, on the downside, every time the market seems to have hit major bottoms or have reacted in excess of 4.5% or 5%, reality has always done an outperforming job in doing almost double that. In fact, today the Sensex did about 6.25% down at 11,847, while the realty index was down by almost 10.6% at 2984. So that's been a very severe blow, and all of the realty stocks, all the 14 on the realty index, were badly hammered down today. And it did not matter whether DLF went through with the buyback or not today, but I think it just got hammered about 27, 28 rupees to end a little above 300 rupees today. And I think that's a story that spreads across the entire realty index as a whole, not just about DLF and the buyback story.
Right.
Reggie, today SEBI came out with a very surprising statement which said that more number of FIIs have got registered. New FIIs have got registered.
That's
now, this is like winding back to history when the last time when the SEBI official said something similar to this and speculated that the markets would touch 15,000. In those days, I guess it was about 6,000. And everybody said that that is a very bad thing to do, to speculate on the market growth and all that. Now, do you think that the present statement also would see more of investments coming in because new FIIs are getting registered with SEBI?
No, I think there are two sides to this coin. One is, of course, the fact that FII registrations into our country always brings in with it the positive of greater liquidity and greater investment coming into the capital markets. So that is definitely a positive. Secondly, FIIs register into any economy or just about any country primarily because they believe that the longer term growth stories are intact. Now, probably with the turmoil that's happening the world over across a little bit of it spreading into Europe, a lot of it in the US and a lot of other markets, I think Asian markets are a little more insulated at this time. I would not rule out the fact that they are not going to be affected, or they are affected, but time will tell us that. But I think at this point of time, a little bit of insulation layer appeals to these FIIs as Asia trying to portray itself as a safer heaven than the rest of the Western world. And this, I think, is one or the second most important reason why FIIs seem to flock to our country at this time. Thirdly, of course, it does not just mean that if FIIs register, that all of that money is going to come into the markets immediately. Because if you look at what happened from May to about July, I think you'll notice that there will be about 239 odd FII registrations even after the P-note ban came in, and with a new set of regulations and registration process that came in. So on one hand, it's good news that FIIs are coming in. It will bring in investment. The other hand also means that all of that liquidity, because of the registration process that has been quicker, does not mean that the entire liquidity is going to hit the market straight away and the market will straight away, just fly away to 15,000 or 16,000. That is not going to happen at once. But going forward, once things change, a greater amount of peace in the financial world across the globe begins to portray itself, I think a lot of this money will definitely propel the markets to much greater heights, along with the growth that this economy is likely to see in the coming years.
Reggie, let me ask you one more thing here. In all this financial meltdown, it's everywhere. It could be in the US or in Europe. Everything has been related to real estate, banks, or mortgage finance. Why is that so?
That's right. I think that's a little misleading of a statement, and subprime has been the problem, all right. But I think the biggest thing, the greatest jargon that's now in the mouth of every single analyst is because of these ninja loans. Now that's what they call it, a ninja loan. A ninja loan simply means a no income, no job person who avails of a loan from a bank simply because all the rest of them had already availed loans. So when credit institutions begin to lend out money to people that are not deserving to acquire that loan and then use that to buy property, and when they're not able to pay back on account of financial upheavals that happen, then of course you have a problem. But in our country at this point of time, at least I have noticed that the banking regulatory mechanism takes into account a greater deal of emphasis on how strong a person's financial conditions are before loans are being handed out. And that, I think, will probably serve to insulate us in a much better way than the systems that have failed overseas and have brought down banks that are amongst the 5 greatest or 4 greatest institutions in the world. So while a lot of it is linked to the subprime and the mortgage crisis, I think the methodology in which it was done is more at the root cause of things than just the fact that real estate has been at the pivot of everything that happened. I wouldn't cause that to blame. Yes, you will find that asset prices begin to blow down, and prices will drop, and all of that will happen. But I think that's just about how any capital market or any asset market works. You always have cycles of boom and bust, and I think now that bubble has just gone bust, I think we will find a more rationalization of price happening not just here but across the globe as well.
Reggie, got the point. I sincerely hope you wouldn't give the full form of ninja. Now my point here is, when will the real estate companies and infrastructure companies would start thinking of raising money from the markets? It's a very bad question at this particular time, but then to bring some cheer back,
That's right.
Such questions would help. What do you think about it?
That's right.
Or is it going to be
I
too
really
far
don't
away
think
that we can't even speculate?
No, we can, but the point is normally, at least sentimentally, most companies that like to hit the primary market like to do so when the mood is more optimistic. And at this present time, if you compare us with probably the Western world with America, you will find that we've had at least one IPO coming out in the month that just went by in September, whereas for the first time in the history of the US financial system, we've not had a new IPO for quite some time. And that in itself shows that the overall sentiment across capital markets and across companies that even want to make it to the primary market are a little depressed. Going forward from here, to answer your question a little more precisely, I think probably for the realty companies or infrastructure companies to come back to the primary market and try and raise money, I think it would be well past the time when the markets can scale back above 15,000, 16,000 perhaps, and also at a time when inflation begins to drop, so that interest rates come down much more sharply than the levels that they are today. And that would probably encourage people to come back, not just to invest in the IPOs of realty companies, but also to buy out greater units of housing and commercial space that realty companies have built up across the country. That would be a more opportune time, and I think that would happen sometime past the second quarter of 2009.
Yes, Reggie, I guess there are too many ifs and buts here. Anyway, thank you both,
That's right.
Uday Dharmadhikari as well as Reggie Thomas, for being with us on this show. Thank you so much.
Well, that's it from
Thank you so
Realty Check. Have a good day.